Hey, welcome in, guys. We are going to be discussing 0% down conventional loan that could potentially help you guys purchase a home and have zero money out of pocket. There are not a lot of 0% conventional loans out there that will allow for you to qualify. So we're going to discuss it, go over it. It's been a while since I've done a live stream. This is Kevin Jefferson, the People's Lender. If you're new to the channel, do me a huge favor and hit the subscribe button. If you're not new to the channel and you like what we're discussing, check us out. Hit the comment and share button. Let's get into it. So in the market, housing prices are higher than they've been. Prices haven't been coming down as much as people would hope they have. So right now we are looking to find ways of limiting the cash that borrowers have to bring to the table. By doing that, figuring out if this person qualifies for an FHA loan and is there any down payment assistance programs that will allow for them to come with low and no money out of pocket with the FHA program. Then you also have VA loans, which have 0% interest, 0% down payment, and USDA, which has a 0% down payment requirement. All of those are federally backed loans, right? However, there's conventional financing, which is done by Fannie Mae and Freddie Mac, right? And those are from, higher credit score borrowers. Let's just be real. People who have consistently shown that they're credit worthy and that they have the profile fit to qualify for a conventional loan. Now, the way the program works is the way the program works is the borrowers have to qualify for a conventional loan. Um, it's for very low, it's for low to moderate income. What does that mean? Then you're going to hear a term when you're looking at, down payment assistance programs, mainly when you're looking at municipality or city or county down payment assistance programs that says AMI. You're going to hear the terms AMI. That means area median income. Each county, each state has an area median income, and most down payment assistance programs want you to be within 80% of the area median income. Some allow for you to go to 115% of the area median income. What does that mean? What is the income, the average income in your area? And finding out what the average income in your area is will allow for you to see if you meet the guidelines for those particular programs, right? This particular program that we have, it will allow for you to get up to $15,000 or 3%. So 3% of a $350,000 house is $15,000. So this loan allows for you to get up to a $350,000 home, up to $15,000 in down payment assistance. The great part is on this down payment assistance program, let's say it's a $350,000 house, right? $350,000 house, and the down payment is $15,000. That down payment is put on as a second. It is a second mortgage, but listen, this is the kicker, right? That second mortgage, you do not have to make a payment at all. It allows for you to make payments as you go or when you want to. So some down payment assistance programs have it where you pay 2% over what your normal interest rate is, and then you pay a monthly payment on that down payment assistance program. Once you have stayed in that property for 10 years or 5 years, whatever that program is, then you could either sell, refinance, or get out of that loan, right? For this particular down payment assistance program, you have the freedom to make payments whenever you have an opportunity. So if you want to, on the 0% interest, again, 0% interest on that second, right? So if you had $15,000 and you decide, hey, I want to throw $500 at it, then you can. Oh, I want to throw $1,000 at that second to knock down the balance, you can. If you don't pay anything on that balance of that loan, that's fine. However, it's due when you sell or refinance the property, all of it. So there's a huge difference between this program and some of the other programs. So, example, if you decide, hey, in let's say 4 years, you decide, hey, I want to refinance this property, you can then refinance, but when you refinance, you have to pay this loan back and it gets paid out of the proceeds of the refinance. So by paying it out of the proceeds of the refinance, it's allowed for you to purchase a home without bringing a down payment or paying any extra or any money on that loan for however long you have it. If you decide to sell the property, then that $15,000 gets paid back. If you decide that you want to refinance, then that $15,000 gets paid back, but there is no penalty on that loan. And if it stays there for 30 years, you just pay that loan back once you paid off the first. I think it's a great opportunity. Uh, it could help people come to closing with less. Um, it could help people come to closing with less funds out of their pocket. It is only good for single family homes. It's not good for multifamily. So you can't use it for multifamily. You cannot use it for an investment property at all. You cannot use it on well, you can use it on manufactured housing, condos, stick built home, townhouses. You can use it for all of those things. So it's a great opportunity to get into a property with zero money out of pocket in terms of a down payment. And let's be clear, 0% out of pocket on a down payment, and you could be purchasing a home. This particular program does allow for the seller to pay up to 3% of your closing cost assistance. So on that same product, you could come with 15, no money down, and then the seller could pay up to a little over $9,000 for your closing costs if they have the ability to. Again, this all has to qualify, but it is a great opportunity for people to explore options. Conventional financing typically does not have a lot of down payment assistance programs to go along with it. And this is a unique product. And guess what? It's good in all 50 states and Washington, D.C. Caveat, I don't know what you're going to find for 350 in Washington, D.C., but it is available in all states. And it's a great program for you to come with no money out of pocket. So I do want to also say that it is not like some programs where it has a super high interest rate. It has a, market interest rate of what conventional financing is. And it's solely done through brokers. Your retail lenders do not have this option. However, I do. I am a licensed mortgage loan originator. MLS number 1433853. I can lend in all 50 states and Washington, D.C. Again, this is a great opportunity for you guys to get into a home with no money out of pocket in terms of a down payment. And, in this market, some sellers are still paying some foreclosing costs. If they can't pay the entire 3% and they say we will pay 1%, that's $3,500 less that you have to bring to the table. So it's a great opportunity or another opportunity for you to purchase a home. The other thing is some properties that are on the market do not qualify for FHA simply because of when the seller obtained the property, they fixed it up and put it back on the market. Typically, people have to wait for something to happen or they have to wait for the 91 days. In this particular case, that we don't have to wait the 91 days. We just have to apply for conventional financing and see if you qualify for for that program. It is income based. So, we will see depending on your income. What I've come to learn is typically in areas, the income, the income area median income is typically based off of what you make in that area. So, in those areas like a New York or a DC or Atlanta area, you probably have a higher um, area median income as opposed to maybe like a smaller pocket like a Iowa or a Delaware or somewhere like that, maybe even a Oklahoma. Hey guys, if you are new to the channel or just joining us, hit the subscribe button. Also, if you guys have any questions pertaining to this program, to real estate, talk back to me. Drop some questions in the comments. I'm using a new microphone, so hopefully you guys can hear me. I still see people here watching the live, so that means I'm hoping that means that you can hear me. Again, we're talking about a conventional program, 3% down, excuse me, up to $15,000 down payment, and it's the down payment assistance. Max housing price is 350. Available in all 50 states and Washington D.C. And it allows for you to get into a home using conventional financing with a down payment assistance program, which is pretty rare these days, unless it's a local municipality loan or a county or state loan. Hey guys, if you got any questions, definitely drop them in. Um, Definitely drop them in. So also, what we've been seeing in the real estate market is, housing prices are still, for the most part, real estate is a local, it's a regional type thing, right? What prices and price drops people see in California, in New York, Washington State, are very different than what someone may see in Iowa or Idaho. It's a regional area. Even to break it down, what you see in a New York City versus a Binghamton, New York, or Buffalo, New York is regional and different than what you see in those areas. So you just want to make sure that you look at what's going on in your particular area, to learn about, if sellers are paying closing costs, what programs are available, and what options do you have for purchasing a home. So right now, market wise, interest rates are still at their normal, what they've been for probably the last year, battling back and forth between high sixes, low sevens for FHA. Also for conventional financing, you're looking at mid, mid sevens to high sixes. Um, so, you definitely want to make sure you pay attention. So on conventional financing, you do have the mortgage insurance. You do have, you do have to have stronger credit scores. So, while conventional financing says that it has a minimum credit score of a 620, it's typically pretty hard to qualify for a mortgage. I'm not a mortgage, but to qualify for a conventional loan with a 620 credit score, unless you have an awesome profile, great assets, low debt to income ratio, but it is possible. So we have a couple questions. Minimum housing price Kevin Jefferson would prefer. It's a good question. So I would love to say I would be able to help everybody. Typically it's a case by case basis. So example, if you have the ability, it's smaller loan amounts, and let me discuss this. Smaller loan amounts cost the same as larger loan amounts for a company. So if someone brings in $100,000 loan and someone else brings in a $400,000 loan, processing and underwriting still costs the same. The manpower for the people in the back, behind the scenes who get an hourly rate, are going to be the same. In terms of my, loan limit, I love to help everybody, but there's an additional cost. Because if we don't charge a little extra on smaller loan amounts, our company loses money. And so Alfonso, it's a case by case basis. I've helped someone buy a house that the house was 70 grand. Did we make a ton of money off of it? No. Did the person get a house and was happy? Yes. Did they pay some points because some higher costs because to make up the difference? Yes, because there's something called high cost. So if a number isn't over a certain amount, then the high cost factor comes in, and we can't do the loan. And it's not that we don't want to do the loan; it's just they won't allow for us to overcharge people for a loan. So I would say, let's talk about it and discuss it and see if it makes sense. We can talk about it and discuss it. And the other thing is on smaller loan amounts, your interest rate is typically going to be slightly higher. It's going to be slightly higher because of the loan size. The mortgage company has to make a little bit more money um, on that because it's not as big, and they don't know how long they're going to have it because someone could pay a smaller loan off faster. All right, thank you, Favorite Crafts. The guy, do I sound any different? Do I sound okay? I just want to make sure and get a chance to test it out. Um, Actually, I rushed in, before this, and it had nothing to do with my kids and my wife and I. We had a water balloon fight. Had a little Sunday fun day, so I came in, got ready for the event. I mean, got ready for the live, and here we are. So I'm glad you all can hear me. Um, are you able to stack another program along with the $15,000 program? For this particular program, Miss Eunice, no, you're not able to stack any other down payment assistance program? And that's a good question, right? That's a great question. Sometimes you have the ability to stack down payment assistance programs. Typically because it is a grant, a municipality loan. I mean, a municipality grant, housing authority program. Sometimes you can stack those programs. However, stacking them makes causes for sometimes you don't qualify for all, or it may not allow for you to qualify because you're bringing less money to the table. It just all depends. Some program, so this particular program is done by us, as the lender. And what they don't want is for there to be another program in position behind them or before them, because if something were to happen and you lost the home, they would potentially have to pay to a third, because you have the first, which is the traditional mortgage, the second is the down payment assistance program, and the third is whatever program you can stack. Um, some loans and companies will allow for you to stack certain things, but in this particular case, this down payment assistance doesn't allow you to stack. I've asked because I knew that was coming, but it does not allow for you to stack with another down payment assistance program. What are your interest rates and origination fees? So I'm gonna school you guys on something. Um, Technically, we can't quote. It's not legal for us to quote interest rates because everybody's circumstance is different. I do give it a general idea of interest rates being around conventional loans somewhere between right now as of Friday like 8.125% down to anywhere from 7.5. Um, It could be lower depending on if you're willing to pay some discount points to potentially buy down the rate. In terms of origination fees, we don't charge origination fees. We do have to charge discount points to get you the rate or to get you a lower rate. But other fees that you have included could be a processing fee, and the underwriting fee. Typically, the processing fee could be potentially it's around 1095. I'm sorry, guys. It's around 1095, and the processing fee is around 895. So you do have costs for underwriters. You do have costs for processing. All companies charge them. It just depends on how they charge it. Some put it into the rate, so the rate's a little bit higher because they can pay the processors and underwriters out of that fee. Or sometimes, most of the time, it's on the settlement sheet, and that's whether it's a broker or a direct lender. Occasionally, you might see somebody who waives the underwriting fee or something like that, but typically you see the difference in the interest rate. Yvonne, hopefully that answered your question. Um, Somebody's interest rate on a 550 credit score is going to be different if they have a 700. Thank you, Blair. I appreciate it. I'm glad I had to get a new microphone, guys. Last live I did, I didn't realize it, but the sound was pretty bad. And somebody told me in the comments, so I'm glad you guys can hear me with the new microphone. Again, we're discussing a down payment assistance program which will allow for you to come to closing with no down payment on a conventional loan up to $350,000. The loan. So let me preface something also. The loan can exceed $350,000. However, you then have to pay the difference. You have to pay the difference in terms of the down payment assistance as well. So, you know, you could get $15,000 and have to bring a little bit more if your loan amount is higher than 350. And we still have other down payment assistance programs available to us. We have down payment assistance programs that work in multiple states, 48 states. Typically, we have a hard time with down payment assistance programs in New York as well as like Washington State. Occasionally, Massachusetts and Rhode Island, we have issues with down payment assistance programs there. But for the most part, the down payment assistance program that we have does qualify for all 50. This particular one qualifies in all 50 states. If you guys have any question um, pertaining to you know, purchasing a home, what's going on in the market, situation you're in, drop it in the comments. I am here for you for an hour. I miss you guys. Have not been able to do some lives, but let's get some questions answered. Yeah, Miss Yvonne, slightly below 200,000. I'm pretty sure we can figure something out. Let's say it was 125, 150,000. We could potentially do that as well. I just would have to calculate the fees in. So sometimes, a lot of times I get people come to me because they say, "Hey, loan officer said they can't do this loan because it isn't enough." I'll look at it and see what we can do to make it work. It's at that point, it's up to you to decide whether it makes sense for you. And if we can do anything to try to save you money, that is always the case. If you guys are new to the channel and you're just following in or just joining us on the live, after this, you can go to the beginning. We discussed the qualifications that we need for the down payment assistance program with 0% down on a conventional loan available in all 50 states. You can purchase a single family, double wide, manufactured home, townhouse, and a condo. It is not good for multifamily, 2 to 4 units, and it is good in all 50 states right now. We have plenty of funds. We have not been notified that there is a cap or a ceiling. So definitely check into it to see if it's something that you can qualify for. And it gives you multiple options. You can look at, okay, I qualify for FHA for this particular down payment assistance program, and I can qualify for a down payment assistance program with conventional. This is what this looks like in case you run into a property that you would like to qualify for, but it doesn't qualify for FHA. Or it's a condo and you don't want to go through the FHA approval for a condo if it's not already approved, then you can go the conventional route and go through and see if the homeowner association and the property qualifies. Are sellers more likely to accept buyers with programs over an FHA who is using down payment assistance? That's a great question, Blair. I don't know if they always divulge that the buyer is using a down payment assistance program. Before they used to mention it, but not as much right now because a lot of times so previously, a lot of down payment assistance programs used to, you would have to underwrite through the mortgage company, and then um, the mortgage company would underwrite, the down payment assistance program would underwrite that mortgage as well as the down payment assistance to make sure you qualify. A lot of them have gotten away from it. So really, you don't really have to um, discuss that you're using a down payment assistance program because everything is typically done in house, unless you have a great relationship with a person and you say, hey, we need an additional few additional days because it's a down payment assistance program and it has some different nuances to it. Um, but Blair, honestly, a deal is a deal. If it can close pretty quickly, and if it doesn't have a lot of you know, different nuances, then, the seller is what in this market, sellers are taking what they can get. That's the best option for them. So I don't think having a down payment assistance will particularly slow you down. But maybe time frame of not being able to close as fast as you need to could. Hopefully that answers your question. The Blackboard just got your book in the mail. Thank you, man. I appreciate it. So guys, what the Blackboard is talking about, I have a home buyer's journal that I have. I actually don't have it in here in my office. I have a home buyer's journal that I put together where you can um the home buyer's journal where you can journal your process, as I say in the commercial, journal your journey to home ownership, right? Meaning as you go along, you can journal what you have or what you need to do. It has everything from if you have credit issues, what you can document on what you need to work on, budget, a way to lay out your budget. It also has questions that you can ask your lender, questions you can ask your realtor. It has questions pertaining to each houses that you're taking a look at during the process, so you don't always have to remember everything. And then once you become a homeowner, at the end, it has where you can take notes on things from the utilities in terms of who the utility suppliers are, homeowners association, cable, all of those different things. So that if something were to happen to you unexpectedly, or so you don't always have to remember. It's something that you can do, and you can always pass that information on to the next owner just in case he, she, or they have questions pertaining to it. It's a great tool. The link will be below for you to be able to purchase it. You can get it as a paperback for 19.99, and I think the hardback is either 24 or 29.99. But it's a great resource. Everyone who's gotten one so far that I know has used it to help them along in their process. So the Blackboard, definitely let me know what you think, how it works out for you, and good luck in the future. Do you prefer an agent in different states, or do you have your team with the buyer 100% purchase a home? So you do have the ability to refer agents in different states. I have relationships with agents in different states, and I have agents who have relationships with agents in different states, if that makes sense. So I do have the ability to refer you to someone who can help you out um, along the way. So if you don't have an agent and you want to interview one, my team and I can refer you to one. What are the best programs or loans in regards to multi-units? It's a good question, Miss Eunice. So, if you qualify for FHA, it's going to depend. If you qualify for FHA will allow you to buy 2 to 4 units with 3.5% down payment, right? Conventional financing will allow for you to qualify for a 2 to 4 unit property with a 5% down payment. And VA loans will allow for you to qualify for 2 to 4 units with 0% down. So obviously, for me, if you're a veteran and you can buy a multifamily unit with no money out of pocket, in that particular case, the VA loan may be the best for you, right? Each loan has a different nuance or different thing that it does and does not allow. Um, if I had to choose the most seamless process, if you could do it, I would potentially go with if you're not a veteran, right? I would potentially go with the conventional financing because you can utilize some of that income to help you qualify for more homes. FHA does have something similar. However, there's something called a self-sufficiency test. Meaning, if the rents on that property come in, let's say it's $2,000 a month, right? They will only let you get credit for 75% of that income, which is about $1,500 a month. If your mortgage is, let's say, 1450, then you're good to go. It passes the self-sufficiency test, right? However, if the mortgage is 1,800 and we can only give you credit for 1,500 because of a 75% of the income, then it does not have the self-sufficiency test, and you would have to qualify for utilizing your income and that income. On conventional financing, in that same scenario, it doesn't have the self-sufficiency test, and it allows for you to potentially qualify for more income because you have income coming in from the property or will have income coming in from the property. So hopefully that makes sense. But you would definitely want to see about getting pre-approved and seeing which one you can qualify for more for and just kind of go from there. So yes, on FHA, it's 3.5% down, and conventional is 5%, but the difference may be the rules that you would have to go through in order to qualify for the FHA program with 3.5%. But I've done them both ways. So just depending on each person and their scenario. Hopefully that answers your question, Miss Eunice. So $130,000 property under this program, the $15,000 will be applied as the down payment or a smaller percentage of the $15,000. So it's going to be 3%. It maxes out at $15,000 because it's a $350,000 loan limit max. So 130,000. 3% of that is like 3,900, I think. Let's see. So it's like 3,900 bucks that they will do, but you're still not bringing in the down payment and assistance program. I mean, you're still not bringing in money, for the down payment. And if the seller can help contribute to closing costs, then that could be a good bet for you as well. What are the pros and cons for an FHA loan? So a con that I hear people say is that they have mortgage insurance for the life of the loan, whether they put down 20%. If you put down 10% or more, excuse me, if you put down 20%, the mortgage insurance has to stay on the property for 11 years. That's a potential con. Another con could be considered that on FHA loans, their appraisal is a little bit more stricter than the conventional, right? The reason why is because they do something called like a safety test. They want to make sure there's no peeling paint, there's no cracked windows, cracks in the foundation, that the windows go up and down, that they have the ability to lock, that there's no cracks in the siding, that you have access, ingress, and egress, so a way to get in and out of the property. And they want to make sure that the roof has a useful life left. Different things like that. They want to make sure that the electrical sockets work, that you have GFIs in the right places, even as minimal down to if the appliances are in the house, they have to be in working condition. If they're not there, then there's no way to tell if they work. If they do, if they are there, they have to show that they work. If you go to a house and the utilities are not on, you get an appraisal, then the appraiser has to come back and test everything because he or she did not have access to the utilities, right? Pro of FHA, they're lenient on credit scores. You can go down to a 500 credit score, and from 500 to 579, you have a 10% down payment requirement. On a 580 credit score or higher, then it's a 3.5% down payment requirement. FHA allows you for 2 to 4 family with 3.5%. Biggest pro is FHA typically has the better interest rate compared to maybe VA, USDA, and conventional financing. And on FHA, you don't have, well, you have mortgage insurance. So kind of give you some context on the same $350,000 house. If I look at an FHA with 3.5% down, and I have mortgage insurance, my payment is still going to be lower than conventional with with 10% down, mortgage insurance, and same price point. So FHA typically provides you with a lower payment. People say, well, hey, what if I want to get rid of the mortgage insurance? You can at some point. So if you have an FHA loan, you can refinance into a conventional mortgage and get rid of the mortgage insurance if you have enough equity available in your property. So FHA, it's not a first time home buyers program. It just right now in this market, it helps people get into a home with a smaller payment than conventional typically. Oh man. So free your mindset. That's a heck of a question. How do you protect yourself from title theft? I've seen it happening most recently. I have too. Um, I have too. So of course, get title insurance. And the other thing, it depends on where you are. There's a way in Georgia, that you can be notified that if something were to come on or get dinged on you, that you have the ability to know that it's happened, right? That's one thing. Because what I've been seeing in the news is seniors getting displaced, people getting displaced where their home has been sold from underneath them and they had no idea or no clue. Even myself. So listen, I'm gonna share a story with you guys. I have a piece of land that in my hometown, a street over from the house I grew up from, that I own free and clear. I received a call. I received a call. Oh, I received a message from a friend of mine who was a realtor. Said, "Hey, did you reach out to me on Realtor.com?" And I said, "No." And in my mind, I'm like, "Why would I reach out to you on Realtor.com when I knew your number?" So she said, "Okay, I didn't think it was right." So she sent me a screenshot of the message. The person was trying to sell my lot. They made an email address with my name, and they had a different number. They had a DC number. And they were calling around my hometown, and trying to say, "Hey, I need to list this property as soon as possible. You need to sell it quickly." Problem is, in my hometown, I was a realtor, and most people who are realtors knew me or know me. Most attorneys' offices know me, and I still communicate with them to this day. So the first agent told them off. Second agent called me and said, "Hey, man, we got a call in the office that you're trying to sell your lot on XYZ Street." And I was like, "No, that's not me." So there's people out here trying to scam. Ironically, I had a client probably the week before who taught me something based off of his file. What he did was he had a property free and clear, and he put a lien against that property, so that if somebody tried to steal that property from him, that lien had to be satisfied, and that's what I'm in the process of doing on mine. What you can do on a loan that you currently have, I would talk that over with an attorney's office. People are so tech, uh, People are so technical savvy. So when you go to a closing, you're supposed to identify the person. You're supposed to get their driver's license, even if it's a sign away. Where, let's say you're moving to Georgia, but you currently live in Texas, but you don't want to drive to Georgia to you don't want to drive to Georgia to the closing. You have to sign in front of a notary who has to get a copy of your driver's license and verify that that's you. It's no not signing in front of a notary. Even if you're a seller, you have to sign in front of a notary, and they have to get your license and identify it. So somewhere or another, the person who's able to sell it or who's going around selling it, the person who's signing or the notary people aren't doing their due diligence and making sure the person can sign. Even when it's an e-signing, you still have to show your identification. Hopefully that makes sense. But you know what? I'm gonna take notes. I'm gonna do a video on that. I'm gonna do a little bit of research and I'm gonna do a video on that because it sucks. We're working hard to get into these houses and then people are coming up behind us and scamming and selling them to somebody else. With a conventional loan, do you have to have 20% down? You do not, Patrick. With conventional loans, you can go, of course, using this program, you can have 0% down, using a down payment assistance program. If you qualify for Fannie Mae, Home Ready, or Freddie Mac Home Possible, which are programs that help you cut some costs if you meet the area median income. There's that word again, area median income. The 80% of the area median income in your area. It helps give you a reduced rate on your mortgage insurance. It helps give you a reduced interest rate, and it helps kind of reduce some of the fees. So on those programs, you can get in with as little as 3% down if you don't qualify or don't use the down payment assistance program. Um, or if you are, have purchased a home and you're not considered a first time home buyer, which on Fannie Mae Home Style and Home Ready, you don't have to be a first time home buyer. But if you don't qualify for the area median income because you have a little higher income in your then you can get into a home for as low as 5% down. So you don't need 20% to qualify for a conventional loan. Back in the day, they didn't have all of these options, so most people put down 20%. But 20% of $100,000 is different than 20% of 400,000, which 20% of 25,000, which some people paid in the 70s for their home, is a lot different than 100 grand. So no, you do not have to have 20% to purchase a home, unless you're buying an investment property. Alfonso, conventional loans, appraisals, they allow for a little bit more. So, of course, you don't want the house to be falling down. You don't want for the roof to be caving in. You want the roof to be, have a useful life. But they don't, prime example, FHA, if you have carpet missing from a room, it's supposed to be carpet there, then FHA is going to have you put carpet down. Conventional, if there's no flooring, there's no carpet, it's just a raw floor, they're not going to. So they don't look at as many safety issues and small things. And sometimes, FHA appraisals get the bad rap, but they're not really that bad. They're just making sure that the house is in safe condition because they're guaranteeing it. And you're gonna run into the same thing with a VA appraisal as well as a USDA appraisal. How you doing, Miss Glenda? Can I explain discount points? Yes, I can. So discount points are equivalent to 1% of the sales price, right? And discount points will, excuse me, 1% of the loan amount. I'm sorry, of the loan amount. Discount points are used in this market, discount points are charged to help you get a lower rate or a rate. Example, and I always tell people the higher your rate, the less the discount points are. The lower the rate, the higher the discount points are, right? So if you hear someone say, hey, I can get you a 7.25 at par, that means it's close to 100% where you don't bring anything. Sometimes the closest to par might be that you bring $500. It might be 600 bucks, right? If you say, well, I need my interest, what rate do I need to qualify? Let's say you need to have a 6.875 in order to qualify for the loan amount that you need, then there's going to be a fee assessed for discount points. Origination fees are the same percentage of discount points, but origination fees are usually charged to originate and do the loan. Discount points are to pay down on the rate. That's the easiest way for me to describe it. But most companies are charging discount points, and if you don't have discount points, then that's because you're getting a slightly higher rate. My understanding is the down payment is 20%. You can ask the seller to contribute 6% towards closing costs. 3 to 5% down payment. The seller's concession is 3. Yeah, that's correct. Um, if you put down actually on conventional financing, Miss Yvonne, if someone puts down not, I mean not 9%, if they put down 10% or more, they can ask for up to 6% closing cost assistance. Anything below 10 on a primary residence, you can only ask for 2%, and on secondary homes or excuse me, on anything less than 10% on a primary residence, you can ask for up to 3% of seller's assistance. On an investment property or secondary home, you can only ask for up to 2%. Home ready and home possible, you can't own a primary residence. Is that correct? That's a good question. I just went over this too. I can get back to you. I'll find out. Give me a few. I'm gonna pin this and I'm gonna get back to you. All right, no problem. We recently sold my aunt's house to fund the rest of her home care and maintenance. And we, the buyer, supplied a mobile notary, and we had to supply a witness that my aunt is who she is. Yep, and that's what you're supposed to do. You got to check and verify. You know, you got to check and verify that the people who they say they are, and that only makes sense. When I get papers notarized, I go to the same notary most of the time, and even though they personally know me because I've been coming there for years, they still ask me for my ID, and I appreciate it. I want to know. I want to make sure I want to make sure that no one's coming in with my ID trying to sign things over. You see what I'm saying? And when people apply for mortgages, we ask for their driver's license, and sometimes it's like, but I gave you everything else. No, we need to see that to the best of our knowledge that Bob Jones is this same Bob Jones that is applying for a mortgage. Um, and when I do Zoom calls, I want to make sure the person that I saw on the Zoom call in the consultation is the same person that's applying for the loan. It's just checks and balances. It takes a few extra minutes, but it helps people in the long run. So, guys, we have been discussing, things about home ownership. I should have led with this. So, June is National Home Ownership Month. So this is National Home Ownership Month. I wanted to make sure that I went live this month. I plan on putting out some more videos. I plan on going live a few more times this month in terms of national home ownership. Definitely would love to see how I can help you guys get into a home. Would love to see what topics you would like for me to discuss. I want to make sure that I am doing my part educating you guys on the home ownership process. Whether you're retired, 18 years old, 118 years old, if your desire is to own a home, I would love to see how I can help you become a homeowner. It says, Miss Yvonne, it says, a borrower who intends to occupy the property may have a ownership interest in one other financed residential property in addition to the subject property at the time of closing. So yes, you can have you can have owner interest in another property, but of course that will no longer be your primary residence. It will be an investment property or secondary home when you're looking to buy this, because you can only use home ready and home possible for primary residence. Hopefully that helped, Miss Yvonne. Um, I know in the previous videos you mentioned about the process, what the potential buyer would need. Could you explain exactly what the person would need for you to help them out? Sure. So if anybody ever wants to connect with me, the link will be in the bottom of the video on booking a call with me, getting on my calendar. But when I meet with a buyer, the initial consultation, we just discuss, hey, what are you looking to do? How much? Do you have down payment? Are you looking for down payment assistance? Are you moving into town? We just have basic questions, right? So I can get a better idea of what you're looking to do. After that, when I send you I'll get your email address. I'll send a link to my online application. And in the body of that email, it will tell you what documents you need. The documents for a person that's a W-2 employee is going to be different than someone with Social Security. That's different than someone who's self-employed, right? So if you're a W-2 employee, I am going to need the following: 2 months most recent bank statements, 30 days most recent pay stubs, all jobs, 2 most recent years of W-2 slash or 1099s, if you're self-employed, 2 most recent years of tax returns. So if you don't have 23, but you file for an extension, I need 21 and 22, and a year-to-date profit and loss statement. An unexpired copy of your driver's license, your social security card, and or a passport. So we'll have to have another form of government ID outside of the driver's license. If you plan on using funds from a retirement fund like a 401k or an IRA or stocks, I need a copy of the most recent statement for those showing that you have those funds. And to take it a little deeper, if you pay child support, I will need a copy of the court order. If you receive child support, I will need a copy of the court order if you intend to use child support to help you qualify for it. Those are the basic things that we need. Take it a little further. If you are looking to refinance, I need all of the above. 2 months of pay stub, 30-day pay stubs, 2 months of bank statements, 2 years of W-2s, driver's license, social security card, and or passport. And then I'll need a copy of your most recent mortgage statement. I will need a copy of your deck page for your homeowner's insurance, and I will need a copy of your most recent tax bill. Patrick, if I can remember, man, I think you out in Wisconsin. We actually got some programs in Wisconsin as well, man. So reach out to me, get back on my calendar, and let's see how we can help you and your family move forward. If you have a house picked out and my credit expired due to the fact I did not find a home, actually I did, the seller backed out due to the court issue. Now it's available. Miss Yvonne, I'm not sure. If I had to guess, you can just grab a call and or you can reapply and we can pull credit and send me the address to the property you have interest in. And when I'm doing the pre-approval, I can go through and see if you qualify for that property specifically. Does your team fully underwrite people if they request it after applying? We can. So I'm a broker. Some of the companies that we broker to do allow for fully underwritten files. Some don't. I explain why, because I actually just talked to one of my reps on Friday. He was saying that they got rid of doing what you call a fully underwritten file or TBD because they're getting busier and it was clogging up their pipeline because the same underwriters and processors who process and underwrite sales contracts also underwrite the to be determined or the pre-underwritten files. My team can try to do the best as we can to underwrite a file, but to answer your question, yes, we do. We do that. It just depends on the lender and your circumstances. What documents for Social Security? Mr. Vaughn, I need your Social Security awards letter from 2024. A lot of times people say, well, hey, it's direct deposit. When we pre-approve a person, we go off of gross income. And when it's Social Security, if it is not taxable Social Security, we can gross it up 115% because it's not taxable. So we want to get you as much income as we can. So if we have the awards letter that doesn't have your insurance or dental being taken out, then we can use the income that we see that's gross as opposed to what's deposited in your account, which is net. Hey guys, it is definitely, it's been great to be back here, man. I miss doing some lives. My goal is to do more lives with you guys. If you are again watching this and you are new to the channel, do me a huge favor and hit the subscribe button. If you are one of my faithful, let me say this, I appreciate everybody who jumps on the lives and asks their questions. There is no question that is stupid. I don't care if you asked me that question 4 months ago and you say, you know what, I forgot what he said. Let me ask him again. Definitely do that, right? I appreciate you guys coming and supporting me, supporting the channel. The National Home Ownership Month, guys, do me a huge favor. Refer some people to my channel. And the next live we have, let's refer people to it. Let's see if we can get 100 people on the live. 100 people on the live will definitely help push it out to the algorithm. Um, I am able to help people. My team is ready to help people, not just this month, but when you're ready. But we're ready to help you, on your journey to home ownership. The link will be below to reach out to me and contact me. in terms of getting on my calendar. There is going to be a week that I'm booked starting from the 14th until that following week, but I'll be booked out. However, reach out. We'll definitely get you set up. I'll probably have one of my team members who can have you. So if you can't get on my calendar specifically, if you email me, I will be checking it and I can get my teammate to help you as well. If you're watching this, give it a thumbs up. Let me know what you think. If you're watching the replay and you did not get to see it live, do me a huge favor. You can drop your questions in the comment section. I check. But I thank you guys for coming out and asking your questions. How fast can you get a loan pre-approval letter? So it depends on when. I typically quote people 72 business hours. That's because I have to look at every line of the bank statements and pay stubs and do some checks and balances along with juggling other loans, right? Um, I would love to say I could do it faster, and sometimes I can because people apply and and they don't supply all the documentation I need. So I do them in order that they're received. Sometimes if I get in abundance, it takes a little longer, but typically 72 hours, 72 business hours. So Saturday and Sunday don't typically count. But Miss Yvonne, reach out to me. Click that link below to get on my schedule, and we can discuss how we can get you that house. When using down payment assistance, is the closing finalized the day you receive the keys, or does the actual closing process continue after you get the keys? Blair, that's an awesome question. So typically, the day of closing, as long as the loan has funded, meaning our funds are there and the seller's gotten their funds, the agent's gotten their funds, and it's been dispersed to all parties, you should get the keys on that day. From time to time, some sellers need a day or two to get the rest of their stuff out of the house or to make us, to make sure, so that they make sure they're able to close and they may have something called a lease back opportunity. But typically, the day of closing, unless it's negotiated in the contract between the buyer and the seller and both parties agree, you should receive your keys the day of closing because um, or once the funds are dispersed. Sometimes we've closed late at night and the funds don't disperse until the next day because the wire has to hit. But for the most part, you should get your keys that same exact day. Hopefully that answers your question. Hey guys, this has been great. I look forward to doing more lives with you. Share this out to as many, share this out to 3 friends. If you're new, you're listening out in YouTube land and you want to learn more, go to my channel, Kevin Jefferson, the People's Lender, hit the subscribe notification. And for all you guys, thank you. God bless and good night.